All right. Hey, guys. Today we are going to take a look at crude oil, gold, and silver, plus maybe a few bonus currency pairs. We're going to look at things through the lens of LA Wave, of course. Let's start with the crude oil chart. Here we go. All right. We're going to stick to the 4 hour. I'm really interested in giving you guys parameters. So if this is going to play out as I'm showing it here, which is this is a top, and we are coming down in a wave 5, and it's a leading diagonal, which means this wave 5 is going to be composed of 3 waves, this being the A wave, B wave, and perhaps now getting a C wave down, which will be composed in 5 waves, already having the wave 1 in place. There's a couple things about this I don't like, but we're going to circle back and talk a little bit more about LA wave. Right now, I'm just going to give you parameters. So 71, 74 is your first warning that this is not going to play out. Look, this thing is grinding higher. And if you look at the technicals, just, look at the MACD and the RSI, it's just grinding higher. Okay. So I do blink my technicals on and off fairly often, but look at this. It's clearly grinding higher. Any one of these, this is an oscillator, RSI oscillator. I mean, this is embedded, and you got a little bit of a negative divergence here on this tool, and then now we're pegged to the ceiling again. So this thing just keeps grinding higher. So at some point, it's going to pull back. That's my expectation, okay? So the first parameter, the first warning is 71, 74. If you get above that convincingly, I mean, the real line in the sand for this count is 72.41. Above 72.41, and this is now entering potential B wave, the proper B wave territory. So right now I've got 72.41 as the B wave top over here. So the 5 wave down is not ideal. It doesn't measure well. I mean, it is 5 waves. There is no overlap, but that's a very small one too. And look where this is not ideal for 5 down, although technically it is. And this bounce up is relatively devoid of structure, which has me thinking B wave. But if you had to do a 3-wave measurement, 3 waves, because wave 2 should be composed of 3 waves, then if this is A, B, C, it's right up just above here. It's actually 71, 78. So the idea is, if this is going to play out as I've gone it drawn up here, price cannot get above 72.41. So that's your first parameter. If it does get above 72.41, this is the ideal target for where a B wave could top. And all I'm going to do now, look, some people don't like Elliott wave for this reason, but I'm just going to move the B wave over because there's nothing clearly impulsive about this move up. This move down looks more impulsive than this move up to me. And also the way I've measured all of this internally. But I'm just giving you guys parameters, okay? So above 72.41, it opens the door for this B wave to extend. Call it 74.16 to 75.12. And I know that's a dollar. There's a fib in the middle at 74.51. There's also, that's this top over here. So this is a reasonable place. The 764 fib for a B wave usually exceeds the 618. Somewhere between the 618 and the 886 is the typical B wave. If I just go ahead and put the 886 on there, you'll see that it is 75.82. So I think because of this, these yellow orange fibs up here, if this is an A, B, C for the B wave, if it wants to play out in 3 waves, this is the region for it to top. So that's the best I got for you. These parameters, 72.41 and 74, call it 74.83. Those are the 2 upside parameters you should be watching. On the downside, if this is going to play out as I've got it drawn up, price is going to come back down and get below 69.29. So I know that these are wide parameters, but look, on the nano, on the micro, internally, I don't have an edge. I have to zoom out. If I don't have an edge, you got to zoom out and look at the larger structure and try to discern where are the meaningful fibs. There's an expression I like to use: when in doubt, zoom out. Okay, when in doubt, zoom out. So that's why I'm showing you the 4-hour crude oil. All right, so there's your parameters. You've got them, right? All right, let's do the same thing in gold. Look at this beast. Very similar idea, although it has nothing to do with oil. Okay, I'm just mentioning similar idea. Where is the structure in here? Okay, since it already broke this parameter, I have to assume we are already in a B wave. The only way that I could really reasonably measure this, and I've already measured it 10 different ways, which is really the beauty of Elliott wave when you're using Fibonacci, is the best thing I can come up with is something like A, B. So where would the C terminate? Well, as you know, we're always looking for the yellow fibs when I'm talking A equals C and with extensions. So look at that. So it is very possible this is the B wave. In fact, it's already exceeded any reasonable expectation for that to be an A wave. So I'm just going to take that off and I'm going to assume we are in the B wave. What I was looking for was something like this: A, B, C. But this thing seems to have been in a hurry. So if you measure it as such, A, B, C, then anywhere from just above where we currently are all the way up to here is fair game for a B wave. And then the C wave, you're going to get finally a proper wave 4 termination much lower. So that's just the clues. That's the way Elliott wave works. We have these parameters. They broke the parameters to the upside convincingly. And so now we have shifted into the parameters for where a B wave could be expected to terminate. So, and because I don't have very clean internal structure, it's very, very difficult. Actually, I just thought of something. If this, let's see, A, B, I'm not going to waste your time because I'm just trying to give you parameters. Actually, let me come back to that and do a little Elliott wave. So your parameters really are anywhere from just above here, 27, 23 on the December futures contract of gold, 27.23, which is just above current price by $5. Starting from there all the way up into here is where you could reasonably expect a B wave to terminate, which, by the way, ever since it's bottomed, I've had these yellow fibs on here and been looking for a B wave. It's just that the internal structure is not playing out the way I was anticipating. It's just going in a straight line. I mean, almost a straight line, which also is indicative of this being a B wave. So there's your B wave target, anywhere from just above us to another, what is that, 40 points. So I'm giving you a 40 point. The next parameter is 40 points wide to expect a nasty turn back. Now, look, if it keeps going, your warning is if it gets above 27.72, it is possible that this is the bottom of wave 4 and that this is somehow 5 waves up, and then you get a 3 corrective pullback, and then you're going to finish off this 5th wave, which goes much higher. So let's take it one step at a time. And by the way, downside parameter, it needs to get back below this zone in the bottom of that candle right there, just to give you a downside parameter, is 27.10. So your first downside parameter is 27.10. That's the first clue that the B wave has topped 27.10. Okay, there you go. So those are your parameters on gold. Now I'm going to show you, a lot of folks like to correlate gold and silver. This is a 4-hour chart of silver. Okay, here's a low similar to the gold low, but look at gold. Gold has gone straight up in a straight line. Silver has not. Silver has gone up in 3 waves for typically where wave 4 is. And then the issue is you would expect a 5th wave, and I would just call that the A wave of 4. And there's the 3A2 right there at 29.29. So the issue is silver just keeps coming. So here are some parameters. First clue gets above this high, 31.47. And the next line in the sand is 32.11. Look, if this thing makes it to 32.11, this is the pullback zone. This is the next zone. This is the next parameters up here. And it ain't a wave 4 if it gets above 32.11. I mean, I already think it, honestly, this does not seem like it's a wave 4. But listen, it's not up to me. This is your parameter, 31.47. If it can stay below 31.47, which we're right there. I mean, it's had every chance to come down from there, and it didn't. It's very sticky. There's too much buying going on. So if it gets above 31.47, I think it's much more likely you're going to see another 60 or 70, 75 cents up into this zone. It's not going to be a wave 4 anymore. Okay. But that's your parameters. And the parameters to the downside, it's really interesting because even though these charts, I don't relate charts to each other, I'm showing you something very similar in all three of these instruments so far, and that is the downside parameters at the bottom of a wick. So spiky looking wick. So I would consider an important parameter to the downside in silver is 31.0 half a penny, 31.5 a penny. Okay, that is the important level parameter to the downside. Okay, so you've got three levels here: 31.5 penny to the downside. You got to get above 31.47, and if you do, I think it's much more likely that you're going to see 32.11, that zone. Okay, so now you've got parameters on all three of these instruments. Let me just let's see, which currency pair shall we look at today? If you want to see another currency pair in a video, drop it in the comment section, and I'll see if I can get to it. All right, so looking at EU, Euro, US dollar. Here's a parameter for you. This came down. This could be all of it. It depends on the dollar. Did the dollar top already or not? It's possible the dollar has topped already, but it's also possible that the dollar chart shows another shove higher to finish off its move up and finally come back down, the dollar, the US dollar. So if the dollar has topped this EU pair, euro dollar, the dollar is the weakness of the dollar is going to have this low being in. And the weaker the dollar is, this is going to move up. And if it moves up impulsively, it's going to really give us a great clue. And then if it can get above this pivot zone, that's another great clue. So, okay, so the parameter for right now is this last low down here. Just, you can look at these numbers for yourself. Let me zoom in here. I know a lot of you guys are on phones and small screens. Just trying to give you the parameters right here. If the EU, I don't expect it to come back down from here. I think it needs to go higher first, and then it's going to decide, does it need to come back down for one more low, or is this all of the move down? So a parameter is this low, just call it 1.0336, whatever this low is, 1.0336. If this is going to come up in three waves, something like, okay, A wave, B wave, it's going to chop in this range and then come up into here in three waves. This is a great clue. If this comes up here in three waves and then starts the next move lower from this box, should be impulsive, which means we're looking for 5-wave move. These are great clues. So we're going to keep an eye on the dollar. We're going to keep an eye on the structure of price. Here's your parameter. I'm already long. I covered, this was a great short. I covered it all. I didn't get the perfect exit because I didn't take it all off, but I took the rest of it off. And then I put a long on one of these dips, small long, very small, because I want to see more price information. Okay. So that's your first parameter, that low. And your next parameter is really up in here in this pivot. If you want an exact level, I mean, just for now, you could call it the top of this price action right there, 1.0654. Okay, this is a good parameter. So I'm long. Depending on how this behaves, I may end up adding long somewhere in here because I don't think it comes back down directly. I think it could rattle around in here and whip, because if it is a wave 4, by the way, that's what I'm getting at. If this is really the bottom of a wave, a larger degree wave 3, then we need one more wave 4, which if you're an LA wave guy, you know that the wave 4 typically terminates in the same price region as the wave 4 of the one lesser degree. If you're a LA wave guy, you know exactly what I just said. So that's why this is here. And also, this is a perfectly good box for wave 4. It's the 382 and the 50%. Okay, and it's below this pivot. All right, so I've given you the parameters, right? You can see the price levels on this box. You can see this is a parameter over here. The low is a parameter, and this box is a parameter. And then if it does move up into this box in 3 and then give me 5 waves down and then a 3-wave retrace, I will be able to project to come up with a better idea of where 5 would terminate. But I can just tell you right now, this would not be unreasonable. Just call it 1.016. 1.016. Okay. So that's the parameters for EU. And let's look at one more currency pair. That's the New Zealand dollar. Kind of a similar idea with it's all about the dollar, really. Let's look at GJ. So now this one, I was rather disappointed that I didn't get short up here because I don't like the structure and I was looking for it to come higher. But this is the box I've been expecting a U-turn. And if you've been following me, you know that this box has been on my chart for a long time. We nailed this top, we nailed the low, and that's where the easy part was over. I did play long in here, and then now I am finally short, but I took off the majority of my short. We're down here. I did it, without talking too much about it, that's the next parameter for the GJ is to see, and I'm still very small size short, but to see it come down in this 1618 is going to be good towards providing us with a 5-wave move down. I got to say, this is a lot of overlapping. It's very tricky. That's why I like to stay out on the 4-hour chart. But my expectation is that this comes down. You know, if the dollar wants to keep going up, you got the Japanese yen in here. These currencies they're all related, as you know. Everything is relative to another currency, and anything can happen. But only looking at the GJ pair, it sure does seem reasonable to expect that this is still going to come down lower. But I've reduced my size. So, you know, ideally, wouldn't it be great if this does not get back above 195.386? Does not get back above 195.386 and makes a newer low down into this area of, call it 19700. 19700. You know, I would expect it to bounce if it hits this zone right down here. I was disappointed it didn't make it all the way to the zone. So when it looked like it started losing momentum, that's when I took off the majority of my shorts, but I left some on. Just I think it can rattle around in here, but the ideal scenario is it comes down one more time before a more meaningful bounce. Okay, so that's what I got on GJ. There you go. So listen, thanks a lot for watching, you guys. If you're finding value on just me giving you levels like this kind of quick each time, give me a thumbs up if you would. If you want to keep getting these alerts, hit the subscription button, get that notify bell turned on, so every time I make a video, your notification bell will come on. And this is also where I'd like to tell you about the Professor Trades Club, because if you're following the Professor Trades Club, you already know what I'm about. You already know what the professor's doing. If you are new and watching this video for the first time, there's a link down below for the Professor Trades Club. And at less than $1 a day, you cannot find better value anywhere. I've been actively learning how to trade for the last 5 years. And I got to tell you, the Professor Trades Club is bananas in terms of the value that it provides for you. Hopefully some of my guys that are watching this from the Professor Trades Club will chime in and drop a comment in there, letting people know for less than $1 a day, you can get rid of everything else that you're doing. Are you blowing up accounts? Are you moving your stops? Are you changing your mind and getting chopped up in the markets? If this is you, you're on the right path. You're at the beginning level. You are doing what everybody does. Get chopped up, move your stops, blow up an account. Okay, so you come in and join the Professor Trades for less than $1 a day, and what's going to happen is you're going to get a psychology makeover. That's what's going to happen. If you're open-minded and you really want this, come into Professor Trades, learn in the context of a group of everybody supporting each other and developing the same mindset. And Armando is demonstrating it in real time every day, pretty much all day. And then I'm in there just dropping my Elliott wave charts to give you context for the greater picture, the larger degree picture. And the Elliott wave is also good for leaving runners on, so you can see where the extensions may go to. But Armando is the king of great entries and just grabbing the pips, scalping style. That's really what Armando is about. Anyway, that's my plug for the room. I love Armando. He's a great guy. Highly recommend it. Link is in the description of this video. Okay, so now I'm just going to jump back and I'm going to zoom out and just talk a little bit about Elliott wave on those same instruments again. Going back to oil, let's look at the daily chart of oil, because understanding this context is really the strength of Elliott wave. So if you look at the daily chart of oil, ever since the COVID top, which is, well, really the COVID low, created this massive run over however many, what is that, like almost 2 years, 18, 20 months run. And then what we have after that is what looks like a diagonal, because this is 3 waves down for wave 1. Now, look, I've gone over this in my last video, but I'm just giving you a little quick and dirty Elliott wave education. If wave 1 comes in 3 waves, that's a clue that's a diagonal. So, and this is very corrective looking for wave 2, did not make a new high. By the way, of course, this is a continuous contract. So if you've got a 1, 2, and then you have this pretty much precipitous, nasty drop overlapping itself, very difficult to trade. But it did kind of terminate down here right near the 1618. So when you get to here, you're thinking this is all playing out as a potential 5-wave move. You've got a massive spike up for a top of significance. Then you've got a move down for wave 1. You've got a corrective retrace for wave 2 that did not make a new high, just poked above the 764. Then where did this wave terminate? Almost made it to the 1618. And then we have a move that was very difficult because it kind of looks impulsive. But the way this came back down too deep for a wave 2 is a warning that, oh man, we're just chopping in a range and overlapping. And then it comes up not impulsively. You can measure this in 3s. Okay, so you could really measure this as either an impulse, but it measures better as a complex move of 3s. This measures better in 3s. This measures better as a ABC, and this is a triangle right in the middle there, a beautiful triangle. Well, this whole thing could be a triangle, so it makes sense that you'd see another triangle inside of this somewhere, just based on the fractal nature of markets. So then what we would expect is whether you put the wave 4 there or put the wave 4 there, you would expect a wave 5. Is this enough to be wave 5? No. Is this enough to be wave 5? No. Where's the bottom of wave 5? Well, if this count is going to be correct, wave 5 needs lower. And I was talking already about this being a diagonal because of the way it started in 3 waves at the very top after the COVID high, 20 months after COVID. So you would expect to look for diagonals. And that is the reason that we are looking for, as I was just showing you, the parameters that I just showed you here, the reason we're looking for this as a 1, 2 to the downside, because we are thinking of this as a C wave. And here would be the C wave on the daily chart. If I know it's crazy to think that could oil really get down to 60 or below? The answer is yes. This is a major parameter right here. I mean, it's already come up higher than I would like. Right? I've already talked about the parameters, but I just want to explain, zooming out, looking at the daily, what we're looking for. So if this doesn't play, if this keeps coming and doesn't give a rejection very soon, it's almost too late, then what's going to happen is this B wave, whoops, I did not mean to move that. I meant to grab this B wave and turn off my magnet so I can move the thing. B wave. Just call it 7483. Just 7483. So if this is a B wave, guess what? We will play the same game again. Because you see, this already made a new low right here. This already made a new low. So this, if this comes up here and makes a new high, it's not doing so impulsively. So it's going to end up being something like this. A, try again. B, then we will play the same game again. Look for 5 down. That's the deal. The reason I'm not loving this as the low is because, first of all, this structure is janky. There's nothing clean about it. And second of all, this move does not look impulsive. This move up, it does not look impulsive. It looks corrective. Could I be wrong? Of course. So I'm just showing you the reason we know what to look for is by looking at the higher degree and counting and using fibs and seeing how is it moving. Is it moving in threes? Yes or no? Yes, it is. Okay, cool. That's a huge clue. So the one place that you could look at it to move in 5 is either A waves or C waves, because that's all we have to choose from right now. So I'm looking for wherever this tops out, I'm looking for 5 waves down for wave 1 of C. That's the deal. It's just a question of, is it going to happen right here? Because if it's going to happen right here, it needs to happen like right now. Because the more this keeps coming up, I'm just going to move the labels. People give Elliott wave grief for moving labels, but sorry, that's the way the world works. That's the way reality works, because Elliott wave gives you an objective way, more objective than most way to view the markets. Okay, now similar thing for gold. We look at the daily for clues. Now look, we were looking for the A wave here, but we were looking for more structure. And when I see a massive move in a straight line where I'm already expecting a B wave and it's moving in a straight line, it confirms it supports the idea that it is a B wave because of the structure that I've already talked about on this 4-hour chart. So the idea would be, this is not enough time for it to be all of wave 4. Could this be all of this white wave 4? Could this be all of white wave 4? Yes, it could, based on the fact that it is in this blue box, which is the ideal target for wave 4 that goes with this wave 3. So yes, that could be all of wave 4, but I don't like how quickly that happened. I think it should burn more time off the clock. So that's one clue. You would think it would burn more time off the clock. Second clue is, this is just a vertical line, almost structureless, just straight up. I mean, there's some structure in there, but it counts better as a 3-wave move than it does a 5-wave move, because it's already wrecked all the ratios that I had. Like if this was going to be a 5-wave move up, terminating in here would have been ideal. It just plowed right through there. I mean, well, not straight. It gave you a pullback right here, which I actually caught, but I didn't take the gains because I'm looking for a C wave. All right. And it kept coming. So what I did is, right at the end of the day, I peeled off some, but I still have short exposure because this is the area you would expect a U-turn. Look, the best I can give you the parameters, but I wanted to zoom out and show you on the daily chart why I'm looking at those parameters and where I'm looking for them and why. So the idea is A, B, C. This would be an ideal wave 4. Burn more time off the clock. Get deeper into this wave 4 box. And then look for a juicy 5 waves up. And look, this is where we're looking. Just call it sort of a minimum target. Of course, it depends where this bottoms. But if it already bottomed, if that really is the bottom of wave 4, just call it 3,000 would be a minimum. Another $300. Wow. And then a very long-term nasty correction. Gold is not just going to go to the moon. So that's the deal. That's looking at the daily of gold. Let me look at the daily of silver. Now, this is where, when you zoom out, you can see the similarities between gold and silver. But, you see gold is much further along. If you just look at the daily of gold, look at that. And then if you look at the daily of silver, no. So wouldn't it be interesting? Anything can happen, right? But at the moment, gold and silver are not trading together. They just aren't. I know a lot of you think that gold and silver just are the same thing and they trade together. Not true. Each chart on its own. LA Wave guys know that and have experienced it and believe it and trade as such. Each chart on its own. Look, it's hard enough to get one count right. Why would you correlate? And then you have to get both right. But the idea is if this comes down, let's say B wave tops in gold and gold starts ripping lower, and let's say this starts coming down. The way I'm going to view it is that it's going to get a lower A wave. This 382 is the ideal target for an A wave. So, but this is just about the max of where silver can withstand. So keep that in mind. This is what I'm looking at. If silver breaks out up in here, we're going to give you better parameters once I have more price information to measure, because silver does measure quite differently than gold at the moment. So we'll see about this. This is really indecisive right here in silver. Gold is much clearer, actually. Gold is much clearer. Silver less so, but this is the general gist of it. Is the A wave done? Yes or no? If the A wave is not done yet, this is not going to come up and make a new high, and it's going to come back down deeper and ideally strike this 382 fib, right over here, and that'll be the bottom of the A wave. Then we get a B wave bounce, and then silver just burns even more time off the clock. I don't have do I have a timing fib on here? I'm going to put a timing fib on here. Something I've been experimenting with. Oh, actually, it is on there, but it's way over here. So it is possible for wave 4 of this degree to actually burn a lot more time off the clock than you would think. Same thing in gold. So that's another reason why I don't think this is the low for wave 4. Could it be? Of course it could. Yes, anything is possible. But just based on experience, wave 4 of this degree, in other words, this white parentheses wave 4, which is a higher degree wave 4, typically it takes more time. So, I would love for this to come down directly, but it's not up to me. And I got to say, this looks this looks bullish, although it's not impulsive. It looks bullish though. Let me see what the text. Yeah, interesting. Texts aren't really helpful. I mean, this is the kind of technical that you would expect a pullback from on this oscillator tool, but look what it did over here. This thing was just got embedded. So I prefer price action over technicals, but I just wanted to blink that on and off. And just since we're on the topic of technicals, let me look at the daily. Yeah, see that this has on the daily, silver still has room on the technicals to come higher, and especially this one being so oversold. So yeah, the technicals, man, I would have to lean towards silver being a little bullish. So gold can continue, silver can continue higher this week. That's the deal. And let's see, I guess I could. Okay, let's just look at one other longer term chart, and this is wild. UJ, man, if the dollar wants to keep showing its strength, look, this is a weekly chart that I created a while back, and I was shocked that I shouldn't be shocked anymore, but just price came right up into this ratio box and got rejected massively. The thing is, there is a reason because of how high this bounce has come. It wouldn't surprise me if this wants to keep coming further up into this box. So for UJ, but I'm not predicting that. And if you do look at the lower time frame of UJ, it is difficult. Although we've had some great trades, and this is really what I'm looking at. If this is going to keep coming higher, it's really got to hold this zone. Okay, I guess that's a fib right there. That's not a price point, but it's got to hold this zone. Let me just put a level there for you in case any of you guys are checking out UJ. So, that's not exactly on there, but you get the idea. So somewhere down here, 153, 300. And then if it's going to break out somewhere up in here, that's the next ratio up. Can you imagine if this thing gets up there? Just see where these other fibs strike. 160, 300. You got 150, 153, 300. So 153, 300 to the downside. And if you look at this, it's just chopping right in the middle of this range here. This does. Yeah, that's not ideal. I don't know. This is no man's land right here. We were able to catch this with the support way over here. But UJ, I'm not trading UJ nearly as much as I'm trading the EU, the GJ, and actually the New Zealand dollar. But again, this is chopping right in this range here. The way I view this kind of action is trying to decide what does it want to do. And, you can just see the zone that I have on here. I prefer that this let go and come down, but it's really about what is the dollar going to do? So, the dollar can keep squiggling higher. Okay. Which is going to bode well for this count. Speaking of indecisiveness, you go back to the US dollar, Canadian dollar. Is that it? Do we get more? Does the dollar weaken and this keeps going up, or is this going to break down right here? What's going to go on? I don't know. You tell me. So I'm going to continue. By the way, guys, this is a good place for me to say that I'm new to currency pairs, meaning, 6 months now. So I continue to learn about them. I continue to track them, starting to learn their characteristics a little better. If you're in the Professor Trades Club, he's definitely covering a bunch of currency pairs. So I'm trying to align my workup with Armando's work, and I kind of support him in his club. And I love his trading style. And he's trading the instruments that I like, which is oil, gold, now currency pairs. But we do a little bit of Nasdaq. Actually, I didn't show you Nasdaq at all. Let's make this a little bonus. Then I got to get out of here. But I'll give you a little bonus. The Nasdaq is a beast of an instrument, and boy, has it been difficult. But I must say, this last week was the best week that I may have ever had trading the Nasdaq. And I'm not a habitual trader of the NASI. It's very difficult. But at the moment, my longs survived. I shorted over here and then I longed it. And I'm still in those longs, which is remarkable. I really need to take them off. But because of this, just couldn't get any downside traction. My preference for NASDAQ is to just see it pop up one more time. I'm going to start peeling. Look, if it gaps up at the open Sunday, I'm taking off at least half of my position. And then I'll leave the other half on and I'll protect it. But I mean, a decent parameter is down here. Just call it, well, 20,800. Just call it 20,800 is a parameter to the downside. And if I see anything up here, I'm starting to peel off my longs, because anything up here now is just a bonus if you're long. This structure is hideous. And, by the way, all this would be is some kind of crazy diagonal. 1, 2, 3, 4, and then 5 somewhere up into here would be probably the ideal target for this to be a diagonal. And then the top we're looking for over here. Look, one way that I could be wrong is if price keeps coming, okay? If price keeps coming all the way up to 21, into this zone, if price comes all the way up into this zone, then that's going to, this whole thing is a wave 3. Then we'll look for a wave 4, and then you'll get a wave. I mean, that's crazy to talk about these levels in the Nasdaq. Oh my gosh. Look at that. Look, it's just Fibonacci. That's all I'm doing is measuring. I know this stuff. If you're not into Elliott wave, you're looking at this stuff like, what in the hell is this madness? But once you understand Elliott wave and know how to measure stuff, especially if you're big on the Fibonacci side of Elliott wave, which I certainly am because of the way I was taught from Avi Gilbert, it's all about the fibs. So, and speaking of that, I mean, let's look at the fibs real quick on the SPX. Look at this. Look how price held the box. I mean, Fibonacci and Elliott wave is pretty remarkable. Even though, none of us know the future, we can't predict the future. We're not trying to predict the future. We're giving you parameters. And my parameter the last time I spoke about this was this blue box. Well, look what happened. Back up. So if this is not the top, which certainly doesn't seem like it, then you've got some other fibs here to choose from. I don't want to overload you with this stuff. I'm not trading the SPX, but I like to track it just for overall market conditions, just overall. So, there are some fibs here that could be the next shot at the top. And there's another set of fibs up here. Gosh, can you believe we're talking about 63.40? Yikes. Or even 60, let's just call it 6150 to 6200. 6150 to 6200. So really now the parameters to the downside are very clear. Get below here, this is still a very big warning to bulls at 50, just call it 57.70. But now you have another level to watch, which is this last low, because that's important now. The way this is moving, that's important. 58.50. 58.50. All right. And if it gets through here, I think it's more likely you're going to go up to at least 61.50, at least, just because of the fib levels. That's all it is. Just Fibonacci. I know it looks like a mess. That's because all these labels and all these markings everywhere are just based on Fibonacci. And if you really want to lose your mind, read these. Let me just read these labels and look at the dates of the year. Now I'm just going to hype up Elliott wave a little bit, because I know there's critics. I know some people like to watch my videos just to be critical. I know, I get it. So, because trading is hard and nobody knows the future, so you'd rather find something else to blame other than your own psychology. I get it. I did the same thing for the first year or two. I understand who you are. That's fine. So, but this is the beauty of Elliott wave, and this is the unique feature rather of Elliott wave versus any other methodology. You're going back to 1949, 45, 1929. These wave structures are that old, looking at a weekly and a monthly. But what I did is I did all that work following my buddy Avi Gilbert in his trading club. He's one of the greatest Elliotticians on planet Earth, facts, as evidenced by his resume and the people who call him to go do private consultations. So these are the fib levels. This is the work that I did on the monthly and quarterly chart. But to save you from making your head explode, I've just posted those in layman's terms, in plain English, just so you can see the efficacy of Elliott wave and the reason that Elliott wave is unique, because it gives you a market context that you are not going to get anywhere else, period. So there you go. So the reason I even bring this up is the whole idea is whenever we next top meaningfully in the SPX, it is possible the party's going to be over for a decade. All right, that's all I'll say about that. All right, guys. So thanks again. Now you just stuck around for like the long version, right? I give you the levels at first, then I give you a little bit more explanation of Elliott wave and give you a little bit more, hopefully, educational aspect of it. All right. Thanks a lot for watching. Keep liking the videos. Keep subscribing. Check out the description so you can join the Professor Trades Club for less than $1 a day and elevate your game. Also, drop me comments. You got questions? Drop me a comment. You want to see other currency pairs I didn't cover? Drop it in the comment section. I will reply. All right. Thanks a lot, guys. Have a great week trading. Good luck. Bye-bye.